we might have to rethink some of our bull market projections. Why, you might ask? Because Bitcoin has already hit multiple all-time highs, including again this week, with high interest rates still in place. Bitcoin doesn't give a crap about high interest rates or tariffs or any of this other bullshit. So imagine what happens if rates drop down to like 1%, which is exactly what the president's currently calling for in the USA. The last time that happened, Bitcoin went absolutely bonkers, nuts, crazy zone, and that was during the worst of times. But today, the economy is booming. USA's doing great. GDP's growing, people have jobs, and low rates would only add more rocket fuel to the markets. I mean, long-term, sure, probably is not going to be great, but still good. If you're still skeptical that this is going to happen, stick around because this shift could change everything. Trump's been pushing the Fed to cut rates since he took office, and they've been very stubborn not to do that. The Fed, being an independent body, does not need permission from the president to do what it wants. Kind of part of the reason that they made them independent, so they'd be free from political pressure. Instead, the U.S. Central Bank has opted to keep the rates higher for longer due to tariff fears. They're at 4.25 to 4.5%. The trade war being really the key reason right now because the inflation's down, and guess what? The job markets are doing just fine. But why does Trump want lower rates so badly? Simple. Cheap borrowing fuels growth. Lower rates make it easier for businesses to expand, easier for consumers to spend, and yes, easier for capital to flow into risk assets like stocks and crypto. And very importantly, lower rates will unthaw the frozen housing market in the USA. Now, to see how this plays out, let's rewind a little bit. The COVID crash sent the economy into a sharp recession, with businesses shutting down and millions of people losing jobs. The Federal Open Market Committee, they stepped in fast, slashing rates at 2 emergency meetings in March 2020. Now, by the end of that month, rates were at zero. Now, that was obviously a global pandemic and a massive crisis. But what happened after that, obviously, is started giving helicopter money. But when money's that cheap, the markets explode. Bitcoin hit $63,000 in April 2021 and $69,000 by November of the same year. The S&P 500 soared, reaching new highs early 2022. And remember, that all happened during a pandemic-induced recession. So now ask yourself, what happens if the Fed cuts rates again, this time in the middle of a bull market? When the economy's strong, jobs are good, all that kind of stuff. Maybe we'll know once and for all how to feel tired of always winning. We've been promised it for a long time. Ready to feel tired of winning, Don. I'm ready. Guys, if you're ready to feel tired of winning, you need a great exchange to do it on. That place is called BitUnix. If you want to start trading over there, they've got some insane deals going right now. But most importantly, you need to understand this is available to anyone, anywhere. It's a no KYC, no VPN exchange, meaning you can long the rips and short the dips no matter where you live in the world on BitUnix. It's available to you, okay? Most important thing. They got all the big coins. They got deep liquidity. And right now, they have a $400 deposit bonus. So if you deposit $1,000, you get $200 back. You deposit $2,000, you get $400 cash money back into your account. Crazy stuff. Plus, you have up to $9,000 effing dollars in trading bonuses. Okay, so the more you trade, the more cash back they give you, basically. It's pretty nuts. It's a limited time offer right down below here. Go check it out. Okay, now let's get back into this Fed chair things. Here's where things start to get a little wild. Fed Chair Jerome Powell's term officially ends in May 2026. Trump has already said that he plans to kick him out, and not with someone neutral, but with someone who will cut rates immediately and dramatically, possibly down to 1% or lower. Trump keeps saying we need dramatic rate cuts. They've been way too high for way too long. Trump's relationship with Jerome Powell is not exactly very good right now. The president regularly just roasting the crap out of Jerome Powell online. He's calling him a numbskull, too late Powell, all this kind of stuff for refusing to cut interest rates. Now, according to Trump, a 2 percentage point cut would save the U.S. government $600 billion per year in interest payments alone, because that's the other part of the equation. It's not just the economic stimulus, it's that the USA cannot afford to keep paying the interest on all their debt at 4.5%. It's crushing America. More recently, he's gone even farther, calling for a 300 basis point cut, or a 3% cut, which would bring rates to just above 1%, but Powell is not budging, at least not yet. And look, to be clear, high interest rates don't mean that markets can't pump. Back in the 1990s, we had the entire dot-com bubble with interest rates above 4%, and as you've seen, Bitcoin has gone to new all-time highs this week, and yet the interest rates are 4.5%. Now, just recently, Trump even sent Powell a handwritten note with a chart showing other central banks are already easing America's way behind the curve. And he's not wrong. Switzerland has already slashed its interest rates to basically 0%. Japan is back to near zero at 0.5%. Japan, you can't raise your interest rates, dog. You know you can't. Meanwhile, Powell continues to hold the line even as the global tide shifts towards cheaper money. It's not just Japan and Switzerland, it's all over the world it's happening. There have been a lot of questions about whether it's even legal for Trump, of course, to try to fire the Fed chair. I think they've been exploring ways to try to do that. Don't know if they'll end up doing that. It'd be pretty bad precedent, to be honest. And there's no precedent for it happening. But Trump might get his wish soon enough, and all he needs to do is wait. See, just recently, the director of the Federal Housing and the chairman of the Fannie Mae and Freddie Mac Committee, William Poult, he called on Congress to investigate Jerome Powell. Well, they're going to find a way to get this dude out, man. They're literally going to investigate him, man. Dog. Whoa, that's some crazy shit. A massive $2.5 billion renovation for the Fed's Washington, D.C. headquarters is the target of the investigation. Poult claims that Powell deliberately misled lawmakers with deceptive testimony, downplaying the cost and the scope of the project, which could be sufficient cause for Jerome Powell to be removed from office. Oh, Jerome, they're coming for you, man. They're coming for you. Now, here's where it gets even more interesting, because one of the biggest reasons that the Fed keeps rates high is inflation, right? That's why they got to have the high interest rates. Inflation, big scary inflation. But what if I told you inflation's already under control? Inflation's not a problem anymore. Hasn't been for some months. The annual inflation rate in the USA is now around 2.4%. Okay, it's not the Fed's 2% target, but pretty damn close, isn't it? Now, it did increase by 0.1% in the last month, but still below expectations for what the increase was going to be and very close to the Fed's 2% target. Certainly not inflation that is requiring a 4.5% interest rate. According to Truflation, by the way, a blockchain-based economic data tracker that updates inflation estimates daily, U.S. inflation is already down to like 1.66%. This is to the moment data, so they're always leading the Fed. This is way below the Fed's own 2% target. Now, unlike the CPI number, which updates just once per month, Truflation uses real-time prices to give a more accurate daily snapshot. In other words, the Fed's target might already be satisfied. And this isn't just one outlier. We also have core inflation, so that excludes food and energy. That has also been trending lower for months. Even stuff like used car prices, which was like, oh, used car price apocalypse. How many times I see that YouTube video? Those prices are down. Rents are stabilizing. And now the plot thickens because rumors are starting to swirl that Jerome Powell may be preparing to resign. Now, how much truth those rumors have, I guess we'll find out. Probably not a lot. Nothing's been confirmed, but the pressure is definitely building. So far, it's all just speculation. But if there's any truth to it, Trump could just get his rate-cutting loyalist much sooner than expected. And I think a lot of people are thinking that Scott Bessent, the current Treasury Secretary, is a good fit for this job, and he will cut the hell out of rates. And that would just pour even more fuel on an already raging fire in markets. And wait, because that's not all. There are more reasons to celebrate. The U.S. M2, the money supply in America, has recently reached new highs of $22 trillion. And according to theories that Bitcoin lags by a few months, that means we're going to see Bitcoin continuing to pump into the end of the year. Global M2 also continues to rage to new all-time highs. All-time highs for Bitcoin. They're coming, guys. Much higher than the current new all-time high this week. Stocks are rallying. The S&P 500, NASDAQ all making new all-time highs. Bitcoin's going to go to 150K before you guys realize it. Even NVIDIA just hit a new record, becoming the first company ever to reach a $4 trillion mark. A $4 trillion market cap. That's crazy, man. The total value of the U.S. stock market is now larger than the combined markets of major economies like Japan, China, and the UK combined, okay? And if that's not a raging bull market, I don't know what the heck is. And here's the deal. It's only 2.5 years old, this bull market. The average bull market's 5 years. Just the average, not the best bull market, just the average bull market's 5 years. I mean, we probably have another 2.5 years to go of this crazy, man. Well, crypto will have definitely times when it tests the heck out of you. We have these big snooze fests like we had over the last few months. Sideways action, then blammo, big breakout. That's how it works, man. It's hard because you watch all the other things breaking out to new highs and crypto's sitting there like, dog, you gonna do something? And that does something. Bitcoin ETFs keep gobbling up coins like there's no tomorrow. They're now holding a huge percentage of the supply. Meanwhile, companies are jumping on the Bitcoin treasury bandwagon faster than mushrooms sprouting after a storm. Just everywhere, popping up. all chasing the Michael Saylor playbook and the dream of crypto riches for their stockholders. And hold on to your hats because, of course, we have sovereign states with their money printing superpowers also taking the damn orange pill. The strategic Bitcoin reserve is still coming in America. And if you think that it's not, you're not paying attention. We're already in a red hot market. Money supply hitting new peaks. Crypto whales beefing up their portfolios. Everything is lining up here, guys. And here's the kicker. We haven't even seen a single rate cut the entire time that Donald Trump's been in office. This market's a pressure cooker just waiting to blow. And let's not forget the other side of this. A 1% rate cut or even a full 300 basis point cut wouldn't just flood the system with cheap money. It could also send the dollar tumbling even lower, and the dollar has already been weak. Lower rates mean less yield for holding dollars, so why the heck would you hold US debt? And you'll make more money chasing risk assets. A weaker dollar means stronger Bitcoin, and if inflation rears its head again over time, which it will, don't get it twisted, guys. This is the exact things that are getting put in motion that will put the next bear market in place. Okay, but until then, and it could take a while to play out. Until then, it's just more fuel for Bitcoin. One thing's clear, we're heading into some crazy uncharted territory, especially if they can find a way to make Jerome Powell resign. And Bitcoin, it might be the one asset completely built for this situation. So the bottom line is that when the Fed finally flips on the money printer and lowers rates and makes liquidity cheaper, brace yourself for a liquidity tsunami that'll send crypto on an absolutely wild ride. You ain't seen nothing yet. So I hope you've stacked enough. I hope you're ready. Thanks for watching.